Big plans for 2019. What's that going to mean to the bottom line of Lundin Petroleum?
Yeah, no, we've had a strong first quarter, production ahead of forecast, and then also operating costs ahead of guidance as well. So, leading to robust EBITDA and cash flow generation for the business. So, overall, first quarter good.
And in terms of the projects that are coming online, I think the market sort of wants to know a couple of different details from you. You've got your massive project. Each quarter we talk to you guys about it is the Johan Sverdrup. Probably my pronunciation is in for criticism. It's due to start in November, according to Equinor. What is the update on that?
Yeah, no, Johan Sverdrup's going extremely well. Key milestone during the quarter was the final installation of the major topsides offshore, so the accommodation topsides and the process platform. So it's all now about hookup and commissioning of those facilities and tieback of the 8 pre-drill wells. And we're firmly on track to see first oil in November. So going very well. And of course, that's a big milestone for us when we see first oil, because we'll get a step change in production volumes for the company. So overall, going
that's
really
a lovely
well.
broad term, but what kind of ramp up can we expect, Nick? You say, look, it's going to be good news. You get the first oil out in November. What is the ramp up projection?
So first, phase one is designed at 440,000 barrels of oil per day. We'll have 8 wells when we start up, and we'll progressively build those in. And we need another 2 to 4 wells to be drilled post startup to get to plateau. So it's going to take to sometime in the summer of 2020 before we reach plateau productions at 440,000 barrels a day. So I think quite quick ramp up to start with, and then a couple of wells to come later on. So I think it'll move fairly quickly when we get going.
Well, anybody who preps you for an interview with me probably says he'll bang on about the dividend. I just seem to ask everybody about dividends. So let's ask you, do I have to wait? Do you and I have to do a few more telephone conversations about production before you'll perhaps up the dividend guidance? Is it on hold until 2020, until that big ramp up comes through?
Well, we upped the dividend guidance this year. I mean, where we're at, we've $500 million of dividend for 2019. We've set that guidance on the basis that it's sustainable in the longer term. But we want to balance being able to grow the business, manage our debt into the right place, and maintain and grow the dividend over time. The business is able to generate about $1 billion of free cash flow per year at $60. So you can see we've got quite a lot of headroom there. But we also take a conservative approach, and we like to be able to maintain this even in low oil prices. So we have the capacity to do everything actually, and hopefully over time we can grow the dividend. But that's where we've set it for now.
Obviously, the Norwegian Sovereign Wealth Fund's decision or their announcement to divest from independent exploration and production companies. How does that manifest in terms of a risk to the business? Put that decision in the context of Lundin Petroleum from a risk point of view or from a consequence point of view.
Well, I think their decision is driven around diversifying away from oil, given that most of their revenue comes from oil. So, in fact, their holdings in us are, very limited. So, it's not going to have a big impact on us. But so we don't see it as having a material impact on our business.
Nick, Bob Dudley saw the bandwidth for oil as being $60 to $75. One could say mind the gap. But when you see all of the constraints on the supply side versus the American production, etc., how do you see 2019, the rest of 2019, playing out for a bandwidth on oil?
Well, it's clearly been very volatile and over the last 6 months, and I think we see that going forward. Iran waivers, Libya, Venezuela, all having impacts. Shale has been able to respond over time, but can it to this? So I think we see strengthening oil prices, but we don't plan on that. We plan conservatively, and we have a high-quality portfolio, so we're able to manage at lower prices. So. But clearly higher prices are good for our business.
Nick, just a final opinion from you. Today is the day in which those waivers end from the United States of America. Does it take up much of your conversation? Do you give it much thought in terms of the consequences?
No, we don't. I mean, we plan our business conservatively so that we can work at low oil prices, and you know, if things turn out better, that's great. Nothing we can do to influence the outcome on those sort of things. So you know, it's to manage our business prudently, and we'll get the right outcome.